Well, it's the big day for D Street because we have seen a sharp fall, a crash in the Indian markets, the worst fall that we've not seen in the last 10 months in the Indian stock markets. Look at a bright shade of red across the D Street today. Although, if you want to take heart, if your chart will itself indicate that we have ended at near the high point of the day, despite the fact that we have ended over 3% lower in the Indian markets, 740 points of a loss for the Nifty, over 2,000 points of a cut for the Sensex, all the sectors of the Nifty into the deep red. You have also seen 48 stocks of the Nifty down in the red, barring just two, that's HUL and Zomato, managing just a shade of green in the Indian markets towards the last point or last tick into the Indian markets trade as well. Now, what has happened and why have we actually seen the stock markets crash today is because of Trump's tariff blow that has caused a global market rout. What we did see for the US markets on Friday night transpired into Dow futures. That's also been indicating a sharp sell-off. We've also seen across the Asian markets fall of up to 10% odd as well on many indices. Taiwan, Hang Seng, China, across the board, there was a somber mode. It was a manic Monday for Indian investors. Already, right at the opening session, we saw 19 lakh crore rupees of investors' wealth having been wiped out, and that was with the sharp opening that we had actually seen. Now, what we also have is top market experts joining in to really help you identify what really went behind the sharp sell-off in the markets. What does it really mean for an average retail investor, and how worried should you be looking at the sharp fall in the Indian stock markets? We'll be joined by Sudeep Bandyopadhyay, Group Chairman of IndiTrade Capital, to help us understand what exactly have been the key reasons behind the fall and what do we foresee going forward from here. We also are joined by Kshitij Mahajan, CEO and Managing Partner of Complete Circle. Warm welcome and thank you so much for taking the time out for this discussion. We have been talking about the markets right from morning, and we've seen how havoc has played on D Street as well as in investors' minds. I'm going to be starting off with you, Mr. Bandyopadhyay, to understand better as to whether this kind of a rout was expected in the Indian markets. Have we seen an overdone of sell-off that we have witnessed today, or is there going to be more pain going forward from here? Already, we've seen China come out with retaliatory measures. We now have Spain talking about how retaliatory measures are now laid on the table. It's not one nation. Many nations against US now coming together and talking about a trade war. How much worse can things get from here on, Mr. Bandyopadhyay?
It can get far more worse. And look, I think the volatility and unpredictability is the name of this game. What Mr. Donald Trump has unleashed is unforeseen. And, the kind of flip-flops, the kind of rash policy making which we have been witnessing over the last couple of weeks, I think is unprecedented. And markets are also reacting in an unprecedented manner. Whether the market, I think, is done with the correction, I don't think so. I think, further volatility can be expected. Look, what's happening is we don't know what's going to happen today in US when US opens. We don't know what the kind of policy statements will come out from the Trump administration today. They are already talking about putting tariffs on pharma in a huge way, in an unprecedented way. Now, that will be a big disaster. So there are multiple other triggers which can make things even worse from what it is now. Yes, the global markets have reacted negatively, and Indian markets also have reacted negatively, a bit lesser extent compared to, I think, many other markets in Southeast Asia. But I think that's par for the course because domestic internals have been strong. So domestic, inflows of domestic money have been strong for quite some time. So these things have acted as a cushion for India. But this cushion cannot be relied on endlessly. If there is further meltdown in global markets, further correction in US today, tomorrow, I think we will see further corrections in Indian market as well.
Okay, there is something that we need to be cautious about in case the world markets crash even further. There could be some more negative impact for the Indian markets even from this level. Let's get Kshitij on board to understand, what does it really mean if more and more countries join hands and stand up against US tariffs. There is a full-blown tariff war. What are the key implications that you really see for the world markets and for India?
Hi, Sakshi. So I think America is the hub for free trade. So that's how it all started across the globe, and that's how the business used to run. And now maybe what America is doing in the long term, it will the picture will become much clearer. But seems like they want to lower their yields. Seems like they want to work on the inflation side of their country. They want to slow down. It's evident, and they want to manufacture in US. Now it will become clear. But if you actually see globally, yes, we all are linked, and this cannot be even curtailed to what America is doing. It can go further, where you have other countries also joining hand, that they can also have not only retaliatory tariffs, but tariffs to other nations on their exports and imports also. So I think it's too early to comment, but what make me think that yes, we are very much near to what we can say, that yes, we are done with what is happening in the market. But yes, any further meltdown globally, or any further some question marks coming on how other countries are behaving, you might see further some tapering of Nifty and Sensex levels. Having said that, one interesting thing here, Sakshi, is that we have been in a correction mode for last 5-6 months.
That's right.
And money started moving to US and China. On valuation metrics side, we are very attractive, and that's been reflected today also. We have not fallen the way other Asian countries, or let's say European nations, have fallen. In fact, your opening remarks made it much simpler, that we have recovered from what was there in the morning, but it's too early. I think ideal way is to look at those businesses which are much more dependent on Indian consumption, to stagger, but yes, you are almost down 4,000 points from the top.
Yes.
You were at 26,400. You are at almost 22,000. So I think you're almost down from that level. So it's more look like last week of March of 2020, where there can be a good opportunity where you can stagger your things. Having said that, I can't say this is the bottom. But yes,
can't say that this is the bottom. I'm going to be coming to Sudeep at this point in time. What does an average retail investor then do? What Kshitij pointed out, we have been in a consolidative phase for the last 5-6 months. There has been already a lot of pain that retail investors who were so far cheering the uptrend, rallies over rallies, sudden sharp moves. Every time there was a crash, the markets would come back. This is shocker after shocker. After 5-6 months of pain, in March, there was some kind of a respite. Things just started to look up, and bang comes the Trump tariffs, and things are back in a lower, deeper hole. What exactly do you advise retail investors do at this point in time? Also remember, Sudeep, it's not just about the markets. All the asset classes synchronized together to fall. Crude fell, gold fell, bonds fell, currencies are down. What exactly should an average retail investor do? Where is the hiding place?
Couple of things. I think if you are an investor who is investing through SIP, please continue your SIPs. There is absolutely no reason to panic and move out. Look, you must have subscribed to funds at a higher valuation. Now you're getting an opportunity to subscribe at a lower valuation. So please do that so that you can average out over a longer period of time. So you should continue. If you're already invested in stocks, this is definitely not the time to sell and exit, because there's panic selling going on in the market, and your realization will be suboptimal. So just stay put. Now, the most important is, if you have money available and you want to invest, what you should do. To my mind, you should wait and watch right now. There is no need to rush into the market. Definitely, there are a lot of interesting opportunities which are emerging, particularly, I would say, from a risk-averse investor's point of view, in large cap universe, there are multiple pockets where the valuation really, really looks attractive. But having said that, I don't think we need to rush. If you are actually very keen to put money, put maybe 5 to 10% of your money in the markets now. and keep watching the market and keep putting money in the markets over a period of time. Now, pick up only those stocks which are fundamentally strong in the large cap universe and you're willing to hold for 1 year plus time horizon. There is absolutely no problem if you're doing that. I think in hindsight, you will find that you have taken a fantastic decision.
Okay. Kshitij, I'm going to be coming to you. You did say that, you're not going to be calling this as a bottom. We do not know what's going to be coming. And that's what even Sudeep said, that, there could be some more correction if the world markets continue to fall and there are fresh concerns as well that continue to persist. What is that one trigger that you believe will be important to see that a bottom has been made and a reversal could start? Will it all depend on what Donald Trump says? Any signs of reversal on the statements on tariff? Will that be it? Or is there anything else that could probably fuel some more fire in the Indian markets and the world markets too?
Actually, my sense is I think if yields will further move down in US and, once, there is a term called modified duration. And let's say if there's a 10-year bond, which is there, on an average modified duration is 6.5, 7 years. So, people who are investing into US Treasury bonds, they will make good amount of double-digit return there. And that capital appreciation comes immediately once yields move down. I think you will see a reversal of money towards emerging economy for sure. So my sense is almost $900 billion has moved towards US in last 5-6 months from emerging economies. And then the money started moving towards China. So, a lot of hue and cry was there about China and US. I'm saying we have a lot of opportunity in-house in India as well. And you see there are very strong businesses who are fundamentally strong, who are capable of growing at 18-20%. And you see money will start coming back to India as well. Now, interestingly, Sakshi, you should look at the participation of, the domestic institution as well as retail investors also. We have around 57 crore PAN card linked to Aadhaar and only 5.25 crore unique mutual fund investors and 11 crore unique Demat account holders. So eventually, you see that number also is growing with 26,500 SIP book and, a lot of categories of fund like balance advantage fund where the money moves from debt to equity when market falls. So there is a liquidity which has been provided by domestic participation as well. But my sense is one is US coming back to your question, US yield curve going down. And second, you might see some reversal of what has been done and spoken by Trump. So if that has been done, then you might see money moving towards India. One last thing, Sakshi, here is that you have RBI meet on Wednesday.
That's right.
On Wednesday you have an RBI meet. There you might see, because now inflation is in well control, US bond yield is also moving down. You might see 25 to 50 pips of rate cut also, including CRR cut also. That will again push consumption within India. And with the new tax slab, after the first quarter, there will be a lot of money which will be coming to investment as well as in the market, because you have some surplus in your hand, as well as the market will become much more organized as money will move towards the 12 lakh slabs. So I think that all will be very good to see.
Right. Mr. Bandyopadhyay, coming back to you, and there has been a lot of talk about how trade wars can actually lead to a recession in the US. Help us explain that, what do you think an average Indian should be really understanding if the US gets into a recession? What will be the impact on us?
Couple of things straightforward. I think, that's the largest economy in the world. 34, 35 trillion dollars. Now, if that economy gets into recession, obviously it does affect the whole world. The world economic growth will slow down and come to a grinding halt if they get into recession. If that happens, look, you can understand that exports out of India will suffer. Demand from US will not be there. US investors will not be, will become completely risk averse. So there are multiple, impact on multiple sectors. Let's take a look at IT. Now, Indian IT companies, on an average, 50% plus income comes from US. Now, if there is a recession or a slowdown in US, obviously their orders will not come. Existing projects may be halted. Their top line will start degrowing probably in this current fiscal. And the margins, of course, will be under pressure. So pretty much the entire textile industry will be in trouble because of this kind of weird kind of a tariff thing. Some people are expecting that we are at a beneficial position vis-a-vis Bangladesh, Vietnam, China. But these things don't work in a straight line. There are so many issues involved that overall demand depression in US will actually ensure that everybody is impacted.
Yeah.
There are already negotiations happening between US buyers and Indian textile manufacturers for significant reduction in prices so that they can handle the tariffs in US. Now, if that happens, price reduction happens, obviously the margins get squeezed for Indian exporters. So it's a wide-ranging impact, and it's a situation where nobody actually wins.
It's a situation where nobody actually wins, and I hope things are really taken into confidence and then really taken a decision on if it is not going to be helping anyone in the world, why do it at all? Those are the things and the questions that US government should be posing to themselves at this point in time. And of course, we will continue to wait and watch to find out how other countries and nations really take to this tariff blow at large. Thank you so much, Mr. Bandyopadhyay, and thank you so much, Kshitij, for being with us on this special broadcast to help explain what has been behind this bloodbath on D Street today and what do we expect going forward.